Hello and welcome to Crux Investor. We caught up with Cesar Gonzalez. He's a director at Sailfish Royalty. Did a deal recently with Metalla, which gave them $9 million, freed them up, allowing them to pay down their debt, potentially allows them to do a number of things with their Gavilanes Spinout opportunity. We talk also about some of the other projects that they've got and how they plan to tackle them. If you want our thoughts and opinions on their plans, the company, and indeed Cesar, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. We've got commentaries from experts from around the world talking about a number of companies and commodities, and including our royalty roundup that we did. We've got training courses to help you with your diligence process. We've got summaries of all the interviews that we've done to save you some time, because we know you're busy people. But more importantly, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly, safe environment, free from judgment, trolling, and abuse. And I hope you find that attractive, because it is. And you perhaps should go and join them at cruxinvestor.com/club. And we'd love your feedback. So do give us a like, leave your thoughts below. We'll get back to everyone. And if you want to see precisely what we talked about today, do take a look in the description below. Cesar, how are you, sir?
I'm doing all right, Matt. I'm excited to be having an update interview with you.
Well, yeah, you've been busy boy, it seems. Lots to talk about. So we better get on and talk about that. But before well, first of all, let's do some pleasantries. We're not savages here. So how's life in Kansas?
Well, it snowed yesterday.
What?
On April 20th.
That's insane.
Yeah,
that is insane.
The kids enjoyed it, but it was, it's kind of odd.
Yeah, that's definitely odd. Okay. One to write in the diary. Okay, cool. That happened. Hey, well, look, I'm glad all's well there. Wanted to catch up with you, obviously, but first, before we talk about everything you've been up to, give us that 1 minute overview of the business for people new to the story. I'll pick it up from there.
Sailfish Royalty Corp is a precious metals royalty and streaming company. We have 6 royalties, 1 stream, and a silver property. So not your typical royalty company. We actually have a property in here that we're working on spinning out. And, we're running this company on behalf of shareholders. There's a controlling shareholder that owns over 50% of the stock. Management, if you include the in-the-money options, is about 10% of the company. So some chunky shareholders. We also have Paul Stevens in there with over 5%. And we pride ourselves on running this company for the benefit of all shareholders.
Okay, so I'm not going to get into the mechanics or the setup of the company. I'll refer people to the link below, which covers our conversation mid-February. I want to talk about some of the stuff you've been doing since we spoke, and perhaps look forward into some of the things that people can expect this year. Okay, first thing out of the gate, TZ, you sold down 0.75% of your NSR there, got $9 million for it. Why did you do it?
That $9 million we thought was a fair price for half of our royalty. So it's a 3.5%, or it was. 2% could be bought down by the operator, leaving us with 1.5%. We sold half of that to Metalla. It was quite easy dealing with Brett over at Metalla. Give him a lot of credit. He's a machine at acquiring things, and I can see why. We did it because we still had some debt on the balance sheet that we wanted to clean up. So we're now debt free. We have a buyback, which we've actually increased. We were buying back about 3 million shares through the end of July, through July 6th. And now we have the ability to buy another 819,000. So we're active on our buyback, and that cash will be very useful for us to advance the Gavilanes silver property. I guess the best analogy is when you go to sell your house, if you need to paint and fix up the house, you usually get that back and more when you go to sell it. So that cash is very useful for getting Gavilanes ready to be spun out.
Okay, break that down for me. So how much was the debt now that you're debt free? How much did you pay off?
The debt was just over 3.2 million.
Okay.
US.
Cool. So that's where some of that money has that been paid down now completely?
Oh yeah, we are debt free.
Debt free. Okay. The NCIB, you've got an opportunity to acquire how much?
From July of 20 to July of 2021, we have the ability to repurchase about 3.8 million shares. Many of those have already been repurchased, canceled. Some are being held by our broker to be canceled. The net is probably around 800,000 or so.
The net, if you do it, or have you already done?
If we fulfill it. So from now till July, we have about 800,000 shares that we can buy back.
Right. Okay. And you're at 135 today. What sort of price are you going to be looking for? Because you don't want to pay too much, do you?
There was a window there where we were able to soak up a bunch of shares between $1 and call it $1.15. We were very active. We've been less so above $1.15, but we've bought shares up to $1.30. You
have bought shares. Okay. Is your expectation to for the whole you said 819,000? Did you say? What was the number?
Yeah, that was the increase.
Do you expect to wipe that out?
It depends. If the stock is trading at these levels and it's on its own, doing that on its own without us being involved in the NCIB, we're going to let the stock. Okay.
So you got the options. It's there. You'll try. If it works, if it's at the right price, you'll do it. If it's not, you won't. Fair enough.
Absolutely. We want our money to go, as far as it can. So.
Yeah. Okay. So the other thing you mentioned there was the spin out of Gavilanes silver. How's that going? Is that moving forward? Is it going to happen on time?
Well, it's moving forward. We're working on an updated 43101. There's a historical 43101, and in order to spin this asset out properly, the analogy going back to fixing up the house, we have to redo the estimate. What the preliminary numbers are looking quite good. The grade of the deposit has gone up dramatically. And that's because we're working with MDA out of Reno, Nevada, and Resource Geosciences out of Arizona and Sonora, Mexico. And they are modeling this deposit with very strict, how should I put it, limits on the veins. We're focusing on what can actually be mined as opposed to what is present in mineralization that might make for a good science project, but not for good economic analysis. So we're tightening things up. We expect the grade on a silver equivalent basis to be over 250 grams per ton, silver equivalent.
Right. Okay. So what can people look forward to? Again, remind me why you're doing that. Why does that make sense to spin it out?
Well, I don't think we're getting any value for it in our company. I think the royalties are trading at a discount. So a silver property is trading negative. And it makes sense because investors want to buy into a royalty company for the royalties, not necessarily for a property. People have tried the hybrid model. They never get a full valuation. We understand that. We didn't put Gavilanes in there to create a whole separate business. We did it opportunistically. The asset was available for us to take. We took it at a very low price. And now it's time for it to be out on its own and get properly valued, with Sailfish shareholders retaining an equity interest. And I looked at silver this morning. It's doing quite well. It's outperforming gold by quite a bit. So and also, Matt, you're interviewing companies every day. I'm sure the ratio of gold to silver companies is probably 3 or 4 to 1. There aren't very many silver guys out there. And we want to take advantage of that by creating a new silver company.
There's not many good ones, that's for sure. So the TZZ deal, that it makes sense for you because it's freed up. Obviously, the debt is can be crushing. It's always there. It's always looming above you, and you got to work out ways to pay that down. But you've got optionality on the NCIB and the spinner. You're working towards that because it probably makes sense. I would agree with that actually. So TZ deal with Metalla. Good for you. Good for Metalla. I'm sure you're going to tell me both sides got a great deal. Yeah.
It made sense at the time for both sides. Now, we didn't sell 100% of it for a reason. TZ is being advanced. Eldorado has said they want to sell the asset. And the last thing I want to do is jettison the whole thing before it gets sold to a company that then announces they're going to put it in production in 2 years. And I'll have egg on my face. So selling half made sense. It allowed us to do everything we needed to do. And we still have, the other half.
Okay. This is the bit I wanted to get to. Okay, so thanks for dealing with that. That kind of cleared up a lot of questions for me. Here's the bit I want to get to. Okay, San Albino, they are well, they're coming into production. They're going to be generating cash. So that's great news for you. So what can you tell us about timing on that? When can you expect to start seeing some benefit from that?
So you've interviewed my partner, Akiba, who's the CEO of Mako.
Yeah.
Yeah. And he's down in Nicaragua this week. He's been posting on his Twitter feed. So providing, a lot of transparency on what's going on. We are in the process of sending out our first shipment. When I say we, I mean Mako. I'm also involved with Mako, but the first shipment is being prepared to be sent out, and we have a trading account at RBC where I have to give a couple of days notice before that shipment leaves. So I'm patiently waiting for Sailfish's behalf to be able to tell them you've got gold going to Salt Lake City to be refined, where we will then receive our gold credit. So it's coming. But it's taken a little longer. The mining has been lights out. Mako put out a press release on Monday where they gave a summary of the first 4 benches that contain the San Albino vein with average grades of about 17.5 grams per ton. For an open pit, there's really nothing else like it. There's been some criticism that the strip ratio is high, but if you take out a calculator and do some math, it's a 17.5 gram per ton open pit deposit where you're moving ore and waste for about anywhere from $2.50 to $3 a ton. You can carry a very high strip ratio. I've visited mines in Australia where they are mining 1 gram per ton material, and they've got double-digit strip ratios, 10 to 1, and we're in the teens with 17.5 gram per ton material. So I don't worry too much about the strip ratio, but that's where we are. Mining's been going great. The plant has been a little slower than what Mako would like, but the gold's coming.
The gold's coming, and can we get a sense of how you're going to benefit, how your shareholders, Sailfish, Royalty Corp shareholders are going to benefit? Have you got line of sight?
Yeah, so a reminder for our shareholders, we have a 3% NSR essentially. It's structured as a stream, but it's equivalent to a 3% NSR with no tax. That's the way it was structured. So we get 3% of everything coming out of there. Because that's
the bit that's being mined at the moment. You've also got a 2% NSR on some other properties, right? Is that the way it works?
On the surrounding. So the 3% is on about 3.5 square kilometers. The 2%, which is a traditional NSR, it's not structured as a stream, so there's withholding tax there, but that is on 134.5 square kilometers that surround San Albino. So it's two levels of exposure. And on the 3%, the stream, once those gold shipments start going out, we're getting the gold credit, we're booking revenue. And my expectation from talking to Akiba and from being involved with Mako is that there's a large stockpile that's now accumulated, about 12,000 ounces. That because Mako has debt, because Mako wants to convert a lot of that inventory into cash, they're going to be ramping up the mill and the processing plant as soon as they can, as soon as everything's ready to go, to start converting those ounces to cash.
What's that mean? Soon as?
Well, if you've got 12,000 ounces here, the recoveries will, let's just assume 90% to be safe. That's 10,800 times, pick your gold price, let's say 1,700. That's $18.4 million roughly times 0.03. You're looking at about $551,000.
Right, but
just from
that. That's great. It's not a whole lot, but it's a good start. It shows route to market, I guess, as I would say. But when you say as soon as, what does that mean? What's the timing? When's the cash come in?
So the processing capacity is Mako has permits to do up to 1,000 tons per day, but the plant can't handle that, not yet, without being upgraded. So, that can happen for single-digit millions of dollars. So it was built to be expanded to 1,000 tons per day. They have the permits to do 1,000 tons per day. But even with what's available now, they can mine or they can mill anywhere from 500 to 700 tons per day, depending on the availability of ore material or mineralized material. So we'll see. I think that stockpile can actually be converted to cash rather quickly. And then in the background, they're still mining and adding to it. So it's not like that's the only source of mineralization to mill. It's coming from the actual mine and from the stockpile at the same time.
Right. Adding to piles of ore, lovely. You want it converting into gold and getting those gold credits, right? So that's what I'm trying to get a sense of. I get they've started a process and they're ramping up slowly, and all that's fine because you've got to get it right. But I'm just trying to say for your shareholders, what's that cash flow forecast look like over the next, let's say, 2 years? I mean, is that something you kind of worked out?
Absolutely. So at the grades that are being mined at 500 tons per day, at today's gold prices, we're expecting cash flow from San Albino of about a couple $1 million a year on that 3% stream. And there's a lot of upside to that if they want to push the envelope on milling more than 500 tons per day, if the grades are higher, or if the gold price goes up. But the base case is on a full year, not this year because they still haven't sent their first shipment out, so we can't go back in time and produce for the months that have already been ticked off. But for example, starting 2021 January to the end December 2020 or 2022, that's the expectation. A couple $1 million of cash flow to us, revenue.
Once they're up and running at capacity.
At a steady state.
Steady state. Okay. Next year. Okay, cool. Spring Valley.
Yeah.
People want to know what's going on there. Okay, so you, well, tell us what's going on with Waterton.
Absolutely. So that's an exciting piece of news for the company, and we weren't involved with the news. So Cisco Royalties, which is the fourth largest precious metals royalty company by market cap, they're over $2 billion market cap US. They made an acquisition a couple of weeks back where they acquired a 2.5% NSR on Spring Valley. They already owned a 0.5% NSR, so it brings the total NSR to 3%, which is identical to what we have. They paid roughly $26 million for that 2.5%. There were other assets that came along with it, including a royalty on the Moonlight property where we have a 2% NSR. So we know, and an offtake on the Almaden project, which we sold after we acquired Terrico. So we know the other assets that went along with it. I'm giving most of the value for what they acquired to that 2.5% Spring Valley NSR. So if you adjust that, what they paid for the whole 3%, it's around $31.2 million, which is a little bit of an uptick from what we paid for Terrico when we acquired the company in the summer of 2019. So what it boils down to is I'm not excited about the price they paid. I think they got a great deal. Gold was lower in 2019 when we made the acquisition of our 3%. They got a great price. What I'm excited about is now there is a look through on analysis on Spring Valley. Cisco Royalties is covered by 15 analysts. Sailfish is covered by no analyst. We have zero research coverage. And now one of our main assets, our 3% on Spring Valley, will have analysis by 15 of the largest brokerage firms in Canada and the US that cover Cisco Royalties, that cover our space. So I'm very excited to see how they model this, what they are marking it at, because we will be relaying that to our shareholders, in our corporate presentation, create a matrix and show people what analysts are saying about this royalty. And this is so important, Matt, because I've given so many talks on Spring Valley, a 5 million ounce deposit, Pershing County, Nevada, one of the largest undeveloped gold mines in Nevada. And people come back and say, if it's so great, why haven't I heard of it? Well, it's inside of a private equity firm that puts out no press releases. But now there's a 3% NSR inside of a public company that's very well covered by the street, where we will be able to have a pass through on some analysis. So I'm very excited about that.
Yeah, I mean that's great for you because it gives you eyeballs on your project for sure. Let me just understand how it works. So Cisco picked up a 2.5% NSR on Spring Valley. on a different set of property to you? I mean, in terms of the land packages that you've got NSRs, you're not like coexisting with a Cisco, are you?
It's on the same claims. So I'm glad you're bringing this up, Matt, because we have gotten some feedback as well that between their 3% and our 3% on the same claims, the total royalty is 6%. Waterton also has a 1%, so the total royalty is actually 7%, but 1 is held within the operator, so it's 6 outside of the operator. There is a mine in Nevada called Marigold. It's owned by SSR Mining. It's a very cash flow generative mine for SSR. And on a life of mine, they calculated their royalty to be 7.9%. It ranges from anywhere from 2.125% to 10%. You can go in their AIF, you can look at all their information, they're a publicly traded company. So they have a very cash flow generative mine that's actually mining, I think, at a 0.3 gram per ton grade. So it's a low grade, but huge economies of scale. They have 400 ton haul trucks, you name it. They're doing everything they can to make that mine profitable. And at these gold prices, it's very profitable. With the burden of a 7.9% NSR, life of mine average, it could be higher. There could be certain months where they're on concessions that are 10%. So a 6% NSR on a good project is not a killer.
It comes close though. It comes close though. For instance, if I think back to last year, a situation between Mavericks Metals and Karora Resources, Mavericks had a NSR on one of the projects in Australia, 7.25. You've got Karora thinking, why on earth would I mine that? I'm probably not even going to make money on this basis. I'd be paying someone else for the pleasure of mining something which I'm not making money. It just didn't make sense. So, there started a conversation which was 9 months of negotiation. And I'm not sure if that's, normal. But, the basic premise of large NSRs, like 6%, is not nothing. And it's the difference between a company saying, I will mine it or I won't mine it.
Yeah.
Right. So, here, obviously, Waterton's got 1% of that, but another 5% on top of this project, it may not make it economic.
Well, our approach to running this company, Matt, is we're commercial guys. If there is if Waterton came to us and said, hey, we want to buy half of that royalty back to make the project better because we're the owners of the project, we're trying to sell it, take it public, do whatever we're trying to do, we'd say, well, let's talk. If the new owner, after a sale comes to us and with the same proposal, we will discuss that. There are a lot of things we can do to realize value for our shareholders. So I'm not too worried about that. But there is a case study where a mine in Nevada, relatively low grade, but very cash flow generative, is carrying on the life of mine basis a 7.9% NSR.
It makes things harder, but you got to work harder to work your way around it. Okay, I'm fine with that.
And Matt, if you're a chess player, it's a great chess piece to have, because I doubt that a 5 million ounce pre-feasibility level project in Nevada is going to not be developed because there's some royalty guys that don't want to deal. I'm saying right now, we will deal.
How much did you pay for it?
At the right price. So the acquisition of Terrico was $22 million, which was paid in shares, and then we assumed $12 million of debt that was due to Waterton. We repaid that debt with a new piece of debt. So if you add that up, but then you have to subtract the cash that was on the balance sheet of Terrico, which was about $3 million. And then we sold the Almaden project for about $1 million. So you start at 34, you subtract 4, you're right at 30.
Okay. So anything above that looks good. If it gets tough out there, but at least you know what you're aiming for. I say I think that's just down to negotiation discussion. What was I going to say? Oh yeah, one more thing. Now you're soon to be cash flowing. When do you start cash flowing out to shareholders with dividends?
Great question. So that is something we are working on. We're talking to our transfer agent who will facilitate that. And, we have been good about buying back stock, which is a form of returning cash to shareholders. But you're absolutely right that, people like getting those dividend checks. As a shareholder, I like getting those dividend checks. And so that's something that once we have visibility on the normalized cash flow from San Albino, which will be later this year, we're going to initiate a program.
Okay, cool. And then one last one. It's like when we spoke last time, I sort of joking, tongue in cheek, said it doesn't look like you want to be a royalty company. And then you said to me, well, actually, the smart thing to do for us and probably the smart thing for the industry is a consolidation play. There's a lot of companies out there. We've interviewed quite a few recently. You think there should be a roll up. Someone's got to step up and do that. That would be the smart thing for your shareholders and you. Is that still the case?
Yes. And we're talking to, as many people as you're interviewing, Matt, we're talking to them too. And, it's encouraging. I think people are finally realizing that, in order to be an attractive public vehicle, having scale helps, but you have to do it in the right way. And we talked a little bit about this before we started the interview, is that if every royalty company competed at the asset level, you've got about 20 guys going toe to toe, from guys that are sub 100 million to guys that are, in the tens of billions with Franco and Wheaton, those guys. And they're all competing with their dollars and their shares to go after assets. But if you get scale at the corporate level by doing mergers or other forms of M&A, that's actually a much more accretive way of doing things, because you kind of lock up just two parties, potentially three parties, but one side and the other side to negotiate a deal, as opposed to going in with 20 other people on an asset, right? So I'm hopeful that something like that can take place. But if it doesn't, we're getting cash flows coming through the door. Our stock's performing well. We're buying back shares. We're going to be paying a dividend. Our assets are being de-risked. The acquisition of Spring Valley by a Cisco is a nice mark. It's a nice look through when their analysts start covering it. So it's all incremental. And at some point, TZ will be sold by Eldorado to someone who wants to build a mine. At some point, Waterton will sell Spring Valley to someone who wants to build a mine, or spin it out in whichever way to advance that asset. It's too valuable of an asset to just have sitting, waiting for gold to go to 5,000 or whatever. It needs to be advanced.
Brilliant. Look, so thanks for the update. Like I said, I don't want to go over old ground or rehash the conversation we had just a couple of months ago. People can go to the link below. Please look at that. It's a great conversation. Cesar laid out their plans, very clear about it. Nice update, a lot of moving parts, bit of movement. Are you a bit more excited about working in a royalty company now, or you still want to be off somewhere else?
Well, because I've worked within a mining company, working in a royalty company is far superior. I'm just waiting for gold to, and silver to start doing their thing. And I think this summer will be pretty exciting for the precious metals prices, and a lot of attention will come back in. So yes, I'm excited.
Good. Okay, so stay in touch. Let us know how you get on, okay? See you soon.
Thank you, Matt.